Hi, my name is Dennis Feidner, and I'm the founder and CEO for a company called Chief Financial Officer on the Go. We all call ourselves CFO on the Go. And today I want to show you what I think are three cost reports every owner or controller or CFO ought to be looking at least on a monthly basis, if not more often. I really don't care what software you use to do it. We actually are going to show it in a Sage product, but you could do it by hand if you wanted to. I wouldn't want to do that myself, but you could. But I'm going to show you a couple of, and I'll tell you the reasons why we do some of these reports. This is the one I used to do. Actually, literally, I did this by hand, and then I graduated to Excel, and then obviously to a construction solution. But this is what we call a job billing summary. It's for one project by a task of work. We call them cost codes, we call them work items. What my contract was, what I negotiated to get paid, what I've billed to date, what's being held in retention, and what my net billing is, and then a percent billed. But in addition to that, I have my budget plus my change orders, and I have my cost to date and a percent complete. So let's just go to we'll just skip down here to the bottom, down to line 6100. I've billed 5,000, but I've got job costs at 12,000. So this item shows me a minus $7,000 cash flow as of this point. And so that may be right or it may be wrong, but at this point, if I'm in the process of preparing my monthly billing, I will come in here and check off this item to make sure it winds up on the next billing. Or is it a mistake? Could I maybe have charged something to the wrong cost code? And by the way, that happens a lot more often than you think. So if I double click this in this system, I can actually see what got charged to that item to make sure that those items actually belong there. An example, I used to have hot mix charge the concrete items and concrete charge the hot mix items and vice versa. So as a controller, I spent a lot of time reclassifying things to make sure that our cost and variance analysis were accurate. So this is a great piece to start because I can see my cash flow by item. Nice to see during the job, but really positive, thing to look at the end of the job to make sure you actually got the cash flow that you expected. So anyway, not rocket science here. This is something you could do in Excel, but you'd have to rekey the numbers in each week or each month. But you could do something very similar to this in Excel. The other one that I think is important is what we call a committed cost report, and I'm going to use the same job actually. And I don't know if you've ever noticed this, and I'm not picking on QuickBooks. Don't tell them I'm picking on them, but in QuickBooks, a lot of times you'll have a job, and you'll be almost complete, and you're looking at the job, and you say, "Man, this is a good job. I got 15% margin on this job," and then the month it closes, you might be at like 11% or 12%, and then 2 months later, it's down to 9%. And then a couple months after that, it's down to 2%, and you can't figure out why. Well, a lot of the reasons are because if you're using subcontractors or material vendors, they're not exactly the most timely people in submitting their invoices. And so what we do in this report is again, by cost code, we have the budget, we have the cost of date, which I can drill down on again, but we also remind you of all of these subcontracts that have been issued but have not been billed to us yet, and all of the purchase orders that I've written that have not been billed to us yet, or entered into, or they may have been billed but they haven't been entered into the system. They're sitting in a pile someplace, or behind a file cabinet, or what have you. But the bottom line is, I know what my budget remaining is all along the job because I know what I've committed my company to as the job's progressing. So most systems, and especially some of the non-construction packages like QuickBooks, Peachtree, I can go through a whole bunch of other ones, but they don't keep this in play. They don't remind you of the commitments or purchase orders. You just see this. And then most times you're going to go home and think you're doing really well. In the meantime, somebody across the hall or out in the field's written a large subcontract to complete that item or had to buy material, additional material for the job. So this is an issue that we see all the time where bonding companies especially will look at the margin fade on projects. And in this case, we can keep that from happening by reminding you of your outstanding commitments. So anyway, something you may also want to take a look at. The last report I want to look at, and I think when I was preparing to do this, this is probably going to wind up being a video all by itself at some point in time. There's so much that can be covered in an over and under billing report, and I'm just going to do all jobs here. So here's the deal, and I don't know the easiest way to explain this, but let's just say you got a brand new job this month. You started the work. You spent, pick whatever number you want. You spent, let's say you spent 60 something thousand. But you don't get to bill it for another week or two. So when you do your financials at the end of the month, let's say you started on the 25th, you accrued, a bunch of costs on that job. Let's say, again, let's just use 10,000 because it's a simple number. You spent 10,000 buying some materials for the job and ordering them, and you had to pay for them up front. So you charge that job $10,000, but you haven't billed your client yet because you can't bill until the 15th of the following month, for example. Did that job lose $10,000? No. Slip on the other side. Let's say that you went out and picked up a contract and you got a down payment for $10,000 and you haven't ordered anything yet. So now you've invoiced $10,000, so you have $10,000 of income sitting in your income statement and no cost to offset it. Did you make $10,000 this month? No, you didn't. And so what this does, the over and under billings, and I'm not going to go into it because it just does it automatically, but there's a generally accepted accounting principle that says that taking the cost that I spent versus my budget, I can figure out what percent complete I am, and I'm allowed to earn that much of my budget against revenue, and I'll accrue that cost. Or I can accrue revenue against the cost based on the margin I have on that job. So it's not that complicated, but it's something that we have 1,500, maybe just a little over 1,500 clients. And a lot of times when we get a new client, we ask them about this and they say, oh, no, my CPA does that, and he does it at the end of the year. Well, that meant for 11 months that your statements were going up and down, up and down, and up and down. And at one time in a year, you're right. My contention here is this is not complicated. It's not that hard to do. Is you should be doing it every month so that you have financial statements that don't show those spikes and those big valleys, because it's probably because you billed or had additional costs come in that you haven't billed for yet. So anyway, another report, a lot of construction software systems. This was, as you saw, just 2 mouse clicks. It tells me what I'm underbilled on these jobs, I'm overbilled on these jobs, and if I come down the end, I'm going to make a journal entry to record these, and my revenue is going to go up because I'm underbilled by almost $1 million. Okay, so my financial statements, as they stand before this journal entry, would say I lost $1 million plus, and now when I book this journal entry, I'm actually going to be adding $1 million of revenue back in there. So again, 3 reports as a former CFO for 100 to $150 million companies. Again, we work with 1,500 construction companies across the U.S., either offering them some CFO advice or software support. I really think that these are the 3 reports that if you don't have, you're definitely deficient in what you're looking at, and your competitors have better information than you do. So anyway, hopefully that helps. Again, my name's Dennis. Our website's www.cfosonthego.net. Easy to find. We have tons of white papers that will explain a lot of these things. We have a great book, if you're interested, called 7 Secrets of Successful Contractors. It's been a long time since I've read it, but it's probably 25 to 30 pages. Can be sent to you as a PDF, but it's 7 secrets that we think contractors that we know are successful are using today. I don't know why it hurts to send us an email. We'll send it to you. If you use it, great. If you don't, that's fine as well. But I think if you implement some of those secrets, you'll watch your margins grow. Anyway, thanks for your time.